I think that the two biggest concerns you actually touched on in that question, you have the existential concern, which that's a whole conversation. We could dive into that, but I'm not sure if we want to take up a lot of time on the panel there. But then there's the other concern that you mentioned from a job perspective. So if you have AI out in the wild, which you do have now, then the people who use AI are going to be far more productive. And if you're a company, you're hiring and you're trying to expand and win a market, then you're naturally going to want to hire people who have the ability to leverage AI very effectively, because you're going to be able to keep your costs down, run your business at a profit, and build a very big company.
Rather than kind of top-down deciding that something has to have AI and has to have blockchain and the two have to go together, I think one of the kind of main attractions for a lot of people around blockchain is a decentralization component. And so really it does need to be more of an organic, bottom-up sort of an adoption that happens there.
Privacy is a big topic, a big concern right now. But there are a lot of, I think blockchain AI, to me, it's no longer a technology topic, it's a society level topic, just like every round of revolution. When new things happen, most people don't have the knowledge. So that I think that it is, if we want to develop, be socially, I'm kind of taking one step back, right? If we want to be socially responsible, I think it is the leader's role, the leading organization's role to think about the mankind, think about the common problem at the society level, and be responsible.
Both blockchain and AI are changing the financial industry landscape. So AI can process data exponentially faster than humans can. And it also allows financial institutions to leverage vast amounts of data to extract more insights and automate repetitive tasks. On the other hand, you have blockchain, which is also disrupting the financial industry with more transparency and access to financial markets through decentralized finance, or DeFi, and the smart contracts. So as more decentralized autonomous organizations, or DAOs, are launched, the more will be forced to rethink the existing of centralized financial systems.
Sitting in different jurisdictions, we may be advising a client. It could be a bank, it could be any type of entity or a person, right? And we could say, okay, so in Switzerland, we think we're pretty comfortable that this fits into this category. And in the UK, we're comfortable with this. And in Singapore, we're comfortable with this. And in the US, we always have to say, well, wait, how is it offered? How is it marketed? How is it sold? It's really a different set of questions that are being asked. And I think that's where a lot of the differences are coming in. And that's why I think the industry, in many ways, although we do have a large body of relevant case law, depending on which way you argue it, right? SEC is arguing it one way, and certainly those in industry often are arguing it a different way. But contrast that with other jurisdictions that may have more bespoke legislation or bespoke, other types of sandboxes or other situations where the industry may say, oh, that looks a lot more clear. That has a lot more certainty.
The law isn't really settled in this area yet. I mean, you even have July of this year, when the Ripple case, when the initial order in that from the district court came out, basically blowing apart the SEC's whole case, except for one point that looked a lot like traditional finance. And then you had everybody at Coinbase and Binance celebrating, even though you had another judge in the, I'm blanking on the case now. But there was another case decided.
Labs, SEC,
yes, exactly. Where the judge came out and said, I get that this ruling came out, but I don't think it's right. And it's setting itself up for interjurisdictional contradictions, which automatically get escalated on appeal. And then that'll allow potentially a circuit split, which then has to go to the Supreme Court. And then you're looking at Howey 2.0. So it's really one of these instances where what the law isn't known to the regulator, it's not known to the courts, and therefore it's not known to the market. It could be this, it might be that, it looks like something else. And that's why it's very important that when you're positioning yourself either as an investor, as an issuer of digital assets, as a financial services company that might look into offering digital assets to your clients, that you're really paying attention to the developments in the space and appropriately marking those risk factors in any type of offering materials that you're providing.
Can you have an investment contract without a writing between the parties? And number two, okay, so you have an investment contract. Is that the offer and sale and marketing, right? And not embodied in the token? I think that's something that many reasonable minds disagree on right now.
Definitely agree, sort of the cost of compliance has sort of, increased, but that's pretty much sort of a global phenomenon, I would say. That's not specific to Cayman. Ease of doing business, Cayman has been tried and tested. The fund model, if I can call it that, collective investment vehicles, has sort of its early days going back to the early 2000s. And sort of the profession, lawyers, the accountants, sort of industry, government, and the regulator really worked well together to build a product that's attractive for the rest of the world. So, when people think about setting up these structures, sort of Cayman would generally be top of mind, especially also with its location and proximity to the US. And another interesting sort of observation is it's not just that Cayman is tax neutral, but I think politically it's also a neutral environment, which, just given the current environment that we're in, a lot of, high net worth individuals and family offices find that attractive and appealing.
I don't use the term tax haven because I think it's very pejorative and it's a term that's been invented by someone else. If you ask people about the Cayman Islands and they say it's a tax haven or they say it's a beach paradise, there's nothing in between there usually that fills in the understanding of what the jurisdiction is, what is its contribution to the world, and what is the counterfactual, right? So if these types of funds that are domiciled here, or indeed the captive insurance industry weren't here, what would it look like in the world? This place is innovative in a different sense than what we often think of as innovation, by looking and saying, well, what are these legal structures that can be created, and how can we retain our high standards in enforcement of those things and continue to evolve, right? And the evolution of the free society and free markets has been underpinned by that specific evolution.
Everyone benefits. So this idea that Cayman and other tax neutral jurisdictions that have specialized in other areas somehow harm people in other countries is completely wrong. It's actually upside down. And it applies also to investments in African countries. There are significant investments through Cayman, BVI, Jersey, Guernsey, and other tax neutral jurisdictions into Ghana and Nigeria, South Africa, and so on. And those investments enable people in those countries to do better,